Good afternoon, traders. This is Christian from Trade Group, and this is your end of day and end of week market video for Friday, May 12th. And well, another interesting one at that. Risk disclaimer in front of you. Everything we're going through is for information purposes only, not giving any advice or recommendations. Before we begin the video, make sure that you read the full risk disclaimer there. So more of the same today. Bad breath, but we closed decently off the lows. It kind of felt like today we really haven't seen one of these days where there was a decent amount of volatility, price move it to the downside. But again, it wasn't that severe. It feels like it can be, and we've certainly seen that over the last year. We've seen days where going back to last year where the market would just sell off, keep selling off, and really just basically close very close to the lows, not much going on. Today had a little bit of those characteristics. A couple times today I was looking at like the tick index, and you had a couple times like up until about 2 o'clock, 2:30 today, where the market just could not rally. Like every time it looked to counter and move back up, it was met with some heavy selling pressure. But by 2 o'clock, 2:30, things kind of flipped again, and there's still that buy the dip mentality, which again is different than what we've seen over the last year. So a lot of things, of course, weighing on the market. We don't have any of this. We don't have a resolution on the debt situation. I have to think that that is impacting the market a little bit. Remember, when you think about the stock market, it is often it's a confidence game, right? You have to have confidence to believe in the stock market, to believe in that the U.S. economy, even though the stock market is different than the economy, still you have to kind of think that companies are going to earn revenues and generate profits, right, at the end of the day. So if you have this cloud over, overhead regarding whether or not the U.S. is going to pay its debt obligations, if you traded back in 2011, like I did, I kind of thought the same thing back then, like, oh, this really shouldn't matter that much. But the S&P downgraded the country's debt, and it was a volatile time for a little bit until we kind of got that situation under control. So yes, I particularly, for one, like don't have a lot of faith in our politicians. Without getting political in this video, it doesn't matter, like any politician. So that's what kind of makes it a little bit, this time right now, a little bit difficult. But for now, I would say things are kind of holding in there. So let me explain that, and then we will go over some of the performance for the week. But again, you could jump to conclusions here if you like regarding the S&P, but we're still locked in this range. 41.15, if we break that would change my mind a little bit. And then, of course, if we start visiting levels down here, then things are going to get more severe. That's the S&P, and we've got different pictures all around. The diamonds, that is underneath the value area for the month. And again, if you're not familiar with any of the value areas that I discuss, please visit my Twitter page, and you can go right to my pinned tweet. There's all the definitions about the market webs indicator that I use, which is using volume at price, which really gives us some nice support resistance levels to watch. But yes, the diamonds, they need to retake 334.74. I heard some comments today about like how many times the diamonds have been down in a given day, and I think it was 5. And yeah, I mean it's been 9 out of 10 where the Dow has been red, and I think we did cover this a little bit in yesterday's video. So that's not particularly an easy market to trade. So that's another thing. As we kind of come to the end of the week, I like to kind of insert a little bit of not so much sometimes trading psychology, but just understanding what kind of market that we're in. I answer questions from members throughout the trading session, and it's tough to say like, okay, every setup is going to work, because it's not, right? I mean, we'd like to think that every setup is going to work, but you have to be prepared for when these things don't. And, when you're trading, you're putting money to risk, you're putting money at risk. So you have to be cognizant of that every time that you click the mouse, there's an outcome that's going to that you're going to see. And right now, when you look at the Dow 9 days out of 10 being down, it's not a very easy trading environment. Now, I know that we've been finding some opportunities. The FANG stocks have been, the growth names, the big cap growth names have been very strong, and that's been nice. But overall, this is not an optimal trading environment when you have the Dow down 9 days out of 10. IWM, continues to really just, hang around. It did finish only down 20 basis points, but, if you're looking for a trading opportunity, and I continue to watch here, but I'm waiting for 174.32. Again, I've noted this in a few videos, but we had difficulty with the top of value last month. Now we're having difficulty with the bottom of value. So 174.32. Of course, the Qs have been acting better. They did see a little bit of volatility today to the downside, but they held where they needed to. They held the 5-period moving average. Also, what was particularly interesting, and this was a little bit difficult. Again, this market's not giving us like a ton of layups, right? There has been some easier trades, but there's not a ton of them. So take a look at what happened with the Qs today. This was the one candle that was particularly difficult. So we're on the 1 hour bar, what we're looking at, or 1 hour candle. We came right down to the bottom of value. Perfect, held it. Right, next candle, we started to rally, and we rallied all the way up to 324.41 in the Qs, and then we gave it all back in that hour. So the next one, we actually took out the day's lows, right? And here was this 2 o'clock time frame that I mentioned that we held in nicely, and and there's you move off of that into the close. So where does this leave us for next week? Well, I think a little bit in limbo, but we're holding where we need to. So, and that's for the Qs. Now, again, if this loses the 5-period moving average, then, leadership has to come from someplace else, right? And keep in mind, I've said this throughout this year, is that you cannot get complacent in any particular area. Things are going to change and things are going to rotate. I talked about gold a couple of weeks ago, and I said, hey, gold was looking really good. And I said, don't get complacent, and just because everybody's bullish gold names, you can't get complacent in this trade either. And this was, I think, right where we saw earlier in the month on the 4th, things were going higher, and we've come back and look at where we are. And you could see I've got a triangle type pattern drawn in here, but this has not been an easy trade either, right? And again, sometimes when you're looking at the bigger picture, like the weekly charts or the monthly charts, it's a little bit less noise. But I'll tell you, from a day-to-day basis, trying to trade some of the stuff, it's it's very whippy. Bitcoin is kind of interesting too. This is something that I've been tweeting a little bit, because we do kind of use Bitcoin for like a proxy of risk on, risk off. And this did not have a good week this week. In fact, you could see that I've got this head and shoulders type pattern, and we broke this. All right. We might as well look at a couple other things that I like to look at, which is the equally weighted S&P, right? This is also, it kind of looks like the Dow a little bit, right? That is also not inside a range. It's below the value area for May, and it's also below the 200-day moving average, right? So why are we doing all this analysis? Why are we looking at several different pictures? And again, the Qs, so look at the difference between the Q, right, which is above value and trending, versus the same stocks but equally weighted, and you could see it's not it's a different picture, right? It's right at the bottom of value, and possibly breaking down, because it is actually right below the value area versus the Qs moving up. So why are we looking at all these indices, even though you may just trade single stocks? Because it gives you a picture of how the overall market looks, right? And when you're looking at the averages, and when you're looking at things like market breadth, which I will bring up next, you want to have a nice investment landscape, right? You want to see more stronger areas versus more weaker areas. It just makes it easier. And remember, it's a lot about probabilities when we talk about trading, right? And when there's lower probabilities of success, right, that means you're in a more difficult environment. So for example, right, look at the 4-week lows. I mean, again, there's only 30 names in the Dow, but there's 5 names making 4-week new lows. Not one is made a 4-week new high. What about the S&P? And again, we did this yesterday, but again, it's good to look at this on a daily basis. You've got 31 names that made new highs and 50 names that are making new 4-week lows. So for the, basically for the month, right? And then of course, when you look at the 52-week, right, we're seeing now it's pretty even. There were 17 names that made new 52-week highs, and there were 15 names. So First Solar, I mean, unbelievable move today. We'll go over that one in just a second. Again, I'm shaking my head with the move that First Solar made today. If you caught it, congratulations. I didn't, because I didn't really understand what was going on. They acquired a small company for like $47 million. And the street loved it. Apparently, they thought it was a good fit for their business and it could increase revenue quite nicely. But and there's your names to the downside. The Nasdaq, which again covers a lot of stocks, right? Movers today 1,588, decliners 1,236, and you could see a lot more new 4-week lows, right? And that's the same thing for the 52-week. 52-week new lows as well. All right, so that's what's going on there. We could talk about, why don't we start with First Solar, because that was up 26% today. So again, if you were holding or if you bought the dip or something to that effect, pretty amazing move. Look at the volume on this name, right? Just when you think First Solar is done, they did not report a good quarter. And this is one, sometimes it doesn't go by the playbook, right? It doesn't mean, hey, you miss earnings. And, my view is a lot of times that when names miss earnings or don't have a good earnings quarter and they break down like that, they could be dead money for the quarter. Could be is the correct thing, because I don't know what to tell you. That's pretty amazing. And I still think this MAXN could be the new leader. It had a real nice gap up, but not such a great candle today. And it also lifted First Solar lifted the whole group. So, notice where this closed for the day, right at the top of value. This is why I use volume at price, right? This is not a breakout. 22 is something to keep an eye on. I was looking at a name yesterday too, the small cap name INOQ. Notice what it did right before earnings. This name was down about 9% on earnings today, or earnings after the close yesterday. It closed right at that right before earnings. Notice that it did not close above the value area. It closed right there and could not close above there. So it kind of gave a little bit of a clue. So I would think the same thing for ARRY. Watch that 22 level, and if it could break there, I mean, it does have an awful nice sideways pattern. I like sideways patterns in uptrends, and this is technically above the 200-day moving average. So we'll see if it could basically get going for the solar group. So again, I view this group as very difficult to trade over the last 6 months or so. But I'm open. You have to stay open to the possibility that things could change. All right. Might as well go over, I thought biotech, the candle for biotech, this is the biotech ETF, which has made a really nice move this month. Notice that it took out a virgin point of control, and a lot of times you do see some type of fade or digestion. Notice that it's just hanging around here, around this trend line. So this is what we want to see, actually. We don't want to see things go up in a straight line. We want to see what happens when there's a little bit of selling. Like, is it just tight price action, or is it giving back a lot of the gains? So far, it's just tight price action so far. So if it can hold in here, this might be a nice place to kind of think about biotech, because it certainly has shown some leadership. I actually have up, which I'm going to get to a little bit more of, but here's the price action, because we're almost at the halfway point of the month. Today's the 12th. The 15th will be on Monday, but just a snapshot to see month to date sector wise. Biotech's up 6.5%. Interesting, there's not much else really that's up that much. Like even though the FANG stocks have done pretty well, they're only up 0.5%. And you look at how many names are down, like double, or over 2%. You've got a lot that are really down over 2%. You've got the banks, which are down over 10%. Energy, which again, there seems to be this correlation between the banks and energy. It's kind of almost like a recession type trade that's going on there. They're also down over 5% for the month. Steel is down 5% for the month. Financials are, in this XLF ETF, it's not down as much because you have things like insurance companies in there. Pot stocks are down. They've been getting pretty beaten up, but materials are down 3%. So again, a lot of sectors, but things like software, tech, I mean, they're not up huge. Just want to make sure that this is correct. 1 second. Yeah, I just wanted to check the numbers, and you could see the XLK ETF. I think it started down a little bit here in the beginning of the month, but has made a nice move. Speaking of which, you could also look at some of these weekly charts. Here's what XLK is looking like, and this could be the new leader, right? I mean, it's right at this top of value. It's a very easy level to watch for the technology ETF. That's 150.18. We did close above there, but not by much. But keep in mind, and you could just round down and say 150. I think that's going to be really interesting for the week. We did see some call buying today. I thought this was kind of interesting. Visa, everywhere you want to be, right, is what Visa. I'll bring up the call flow so that you could see, but there was a nice chunky block here. This was the SEP 240 calls, right? $2.5 million trade, right? So here's what the weekly chart looks like. It looks fine. It hasn't had major momentum to it, but 240 is $9 up. I would watch for a break of 234.20. A lot of times this is how I use option activity. I say, okay, Visa wasn't really on my radar to go long, but option activity, and they're giving some time. Now I put it into my system and see if it makes sense. So for me, right, this is trading range bound or sideways for the month. If it breaks above 234.20, it is beginning to trend, and that's where I would attack it. I don't mind waiting a couple dollars for that confirmation that something is actually going on here. Starbucks also saw some calls today too. Here's was the start again, like, these were not tiny trades, but look at this one. This is an $892,000 trade, so almost $1 million. October 110 calls in Starbucks. And notice, this had a real nice run up in the month of April. It had earnings and kind of moved down. I actually played this for a couple days. I played the bounce. It worked. I did not stay in long, and it hasn't done much since I exited the trade. But this makes a higher low here and starts to move higher. So that's one name that'll be on our watch list for next week. Sticking with kind of consumer discretionary, Skechers had a real nice move today. So I've talked about this name in the trading room a little bit. The shoes were pretty hot for about a month, but things have kind of broken down here. Nike was one of my favorite setups in the beginning of the month, but it failed here, and I was in a trade and got out of it. And really that's the difference in these little trades like this, like having a trade in Starbucks and realizing it's not working and getting out of it, before it goes, down $6-7, really is what is going to define your month. Because I do a lot of trading, I do a lot of swing trading, and I try not to stay in trades that begin to not look exactly like what I wanted them to do. I was looking for kind of a cup and handle type pattern here in Nike, right? So you have your cup, you have your handle, and you just needed to extend here, and it didn't. It failed. It had an inside day and started to move down. And if you note, like, this has happened to the whole group a little bit. Crocs fell apart on earnings, and I don't think that they have really come back. Here's the move down for Crocs. It hung in there a little bit too and took another leg lower. So, the momentum. So just as I said I was talking about the solar names, but in this case, Crocs moved down, and they could be dead money for the next quarter. We'll see. We'll keep an eye on them, but I have no position in my trading account currently with that name. A couple other names. I traded some. I put this chart out earlier. I'm very much focused on some of the names that really had good earnings. This Exact Sciences, again, it's kind of tough because it's made such a big move on earnings, but I really like this pattern here of sideways, sideways, sideways breakout, and let's see if it can kind of take that next leg higher. Right. Another one too that's going to have earnings in a couple of weeks is Elf Beauty. Didn't close on the highs, but it did get above these 5-period moving averages. I went over this chart yesterday, and I said it was going to be on my radar, and I actually did take a trade in it today. So I haven't gotten to the week's performance, and we'll kind of close here. But yes, today kind of really saved the solar group, up 2.5% for the day. Notice for the week on the top line, the only thing that was green were the Qs. The diamonds and small caps were down 1%. SPY was down fractionally. International ETFs both were down, emerging markets as well as international developed. Bonds were down, gold was down, and the dollar was strong. I want to just bring up that chart. This was something that we went over in the pre-market session. Notice how you have a crossover of these two short-term moving averages, and I think this US dollar ETF can maybe go to this VPOC up here, 28.22. And I don't know if it goes further from there. You do have the 200-day moving average, which capped the move up last time. We'll see if it does the same. But first things first, it has to make it through that virgin point of control. But other than that, other than a couple of those areas that I just mentioned, and we went over, the FANG names were hot this week, up 2%. But you really didn't have much performance outside of that. The home builders did okay. They were slightly up in a down market, so there's outperformance there. But again, look at how many groups were down close to 2% for the week, quite a bit. All right, and there's your international performers. So that is it for this Friday's and the review for the week. Members will receive from me, as usual, a weekend video, macro video, which I try to go through pretty quickly, but go through some of the major points. We talk about credit spreads, and we talk about what the Fed is implying for interest rate hikes and things of that nature, and kind of get into that nitty gritty. And then, of course, what we'll do is we'll put out a watch list. So you really have a game plan for the week. So if you are not a member of the Tribeca Trade Group, here is where you go. You can click right on services here, and you could check out everything that we're doing. But I continue to kind of increase the different services that we provide. My watch list is now all linked up by Bloomberg API. It's got what the performance does for the day. It's got what I have a trigger, which is based on the market webs indicator volume at price, and gives you or gives me an alert for basically when that is that is starting to move above its trigger. And then I measure the performance from where it's at versus the trigger. So these are all things that I go through over the weekend for members to get members ready for the week, even if they can't trade full time. And the special that I'm running is that if you have not tried out Tribeca Trade Group before, you get half off your first month. So 50% off your first month. I don't have a coupon code. Just let me know once you sign up, and we will go ahead and reimburse the 50% back to you. All right, guys, have a great weekend, and happy Mother's Day to all the moms out there.